Welcome everyone. We are going to get started now with our webinar this morning, and I'd like to welcome everyone to our second webinar in a series of 2 webinars on mobile banking. Our first one was on the fundamentals of mobile banking, and if you missed that one, not to worry, we will be looking over some of those details, and all of our webinars are available on our website to review. This webinar today will be focused on implementing mobile banking, and we are pleased that Malith Gunnar-Sakara is able to join us again for this webinar as well. If you have any technical problems during or after the webinar, please do contact my colleague David, either via his email address or via Skype at the addresses that are available here. We do encourage you to participate fully during the presentation. We'll be taking questions continuously via the chat box on the right-hand side of the screen or through the questions box. And I'll go ahead and read them aloud to the facilitator to respond to. And as I mentioned, this webinar, like other webinars, are available as a video on our web community, and you can access those on the website provided. In terms of our upcoming webinars, we are actually going to be looking at some credit scoring and credit analysis tools in June, July, and August. And so we hope that you will join us at those webinar trainings as well. These are all free of cost for current SBBN members. So we're pleased that you are all members and able to join us. And you can register at the website provided. Again, as I mentioned, all of the completed webinars can be viewed again or shared with colleagues at our website. And we do encourage you to share this webinar calendar to those who would benefit at your institution. So I would now like to introduce our very experienced facilitator. Malith Gunnar-Sakara is an SBBN expert with over 28 years of information communication technology experience in 20+ countries across Asia, Eastern Europe, Middle East, and Africa. Malith is the Technology Advisor and Managing Director at CITR, an international technology consulting company providing specialized advisory services to facilitate technology innovations in developing and developing countries. So I will now hand it over to Malith to lead our session.
Thanks, Jessica. Good morning. I think it's afternoon to some of you from right around the world. I think we have quite a number of attendees today. We have a very interesting topic for discussion today, which is whether you're ready to implement mBanking. Now, one thing I need to confess is that this is a very broad subject which cannot be discussed in a short webinar like this, but I will try to give you some of the key aspects that I have learned or experienced while implementing mBanking systems in many parts of the world. So we'll first discuss the mBanking experience worldwide. We'll talk about some business cases, how to build a business case, and also we'll talk about the prerequisites before you start implementation. Obviously, we'll take questions, as Jessica said, and if you have any questions, just send it to her, please. Now, to start off, let's start off with the definitions. There are lots of definitions in this space, and some of us are confused. Actually, when I started implementing, I was confused really because so many definitions. One is mobile money. Usually it's led by MNOs. It's wallets. Certain transactions are allowed, certain transactions, banking transactions are not allowed. Then there is this, in some countries they call it branchless banking. They don't let MNOs do certain transactions, many transactions actually. It has to be a bank-led operation, or the corresponding bank or the back-end bank, there has to be a bank, not an MNO. So these are called led operations. Then they talk about MFS, which is Mobile Financial Services. It's a mixture of MNOs, banks, and there are hybrid implementations. Then we talk about e-money. I learned about e-money, and then the definition that we came up was that e-money is usually for specific type of transactions, small transactions in terms of small values. So those are the e-money. The latest definition is digital financial services. Now, digital financial services makes more sense purely because it covers all digital transactions, from mobile money to branchless banking to POS, ATMs, internet banking. All these transactions are covered under the digital space. You get also even cards, prepaid or credit cards, all these transactions come under this. So I think now everybody uses DFS than using MFS or mBanking or mMoney. Just to give you a snapshot of how things are at the moment, GSMA carried out this study recently. It's published. If you go search the web and go into the GSMA site, you can look at this report. It's quite interesting the way things have been moving. There are about 150 live implementations for the unbanked, mainly targeting the unbanked. Lots were launched in 2012, not last year, the year before that. The users are growing rapidly right around the world, so that means there will be new innovation, new technology, lots of areas where they will build and develop, especially not only the technology, also the practices, to make this service a very efficient service. 14 mobile money services has grown quickly. It has had rapid growth purely because there had been the need for that service. In some countries, there are more mobile money accounts than bank outlets, purely because the banking penetration levels or access to finance is pretty low in some of the countries. So if you really look at it, I mean, this industry is growing pretty fast. And a lot of people are planning to get into this. I would say some will be forced to get into it purely because to keep up with the competition. So let's get on to the first question. My question to you all is, what is the first step when you consider implementing mBanking? We have given you 6 options. Jessica, over to you.
Great. So if folks want to go ahead and type in their, you can actually do this as a poll. Great. So if folks want to select one, essentially what is the first thing that you should consider before implementing mBanking? So is it mobile coverage? Is it the investment costs? Is it the strategy, agent network, or products? So please go ahead and begin to answer the question. That poll is open, and we'll keep it open for about 40 more seconds. And so we're starting to see some answers come in. So thanks to everyone who's voted, and we'd like to see a few more responses. So we'll give it another 15 seconds or so. All right, another 10 seconds. So if you haven't gotten in your response, we hope that you will put your response. All right, we're going to close that poll. Okay, so it looks like about 60% voted for strategy development and 40% voted for full coverage.
Okay, this is good. Now, this is exactly one of the points that we want to discuss during this webinar. When we analyzed the 150 implementation right around the world, as you know, there are very few who has gone above the tipping point and is making money, basically profitable, if you take it as a cost center or a profit center for that matter. When we analyzed it, we found that most of the implementation, they look at this as a IT project and it's been driven by IT people. So this was one thing that we saw. The other one was they didn't have the market coverage from the mobile operators. Some didn't have the technology. One of the most important ones were the networks. And some said, we have general products. General products, you need to have targeted products for different customers. But we need to put all these things together and develop a strategy. That's the starting point. And a lot of these implementations have not looked at the strategy. You need to start looking at the strategy, and there's a lot of things that needs to be done before you start implementing. Your lead time is about 6 months. It takes about 6 months to develop a strategy because you need to look at the market, you need to look at how you're going to deliver, who's going to be your agents, all that stuff. And at the end of the day, there's going to be an investment cost. Now, that is something that you need to look at between 2 to 5 years in because there's going to be recurring cost and stuff like that. We'll discuss all these things in the other slides. But the key thing is strategy. So please start with the strategy first. I know it consumes time. You need to get on this bandwagon as fast as possible. But one of the most important things is strategy, because then you will do it right. If not, you will you may have to correct things midstream, and that's going to cost you a lot of money. So let's move on. First, we need to build a business case. What is the need? So before we start, why do we need to do this? You need to question what is the need actually. We need to do a needs assessment. Who are your clients? What do they need? Will they use it? All these things need to be looked at. Then obviously you need to look at the regulations. I mean, there are strict central banks in most countries, especially in Asia. But this is my experience. I've seen in Asia, they only let you do certain things, and the regulations are pretty tough. The KYC requirements are pretty tough. So sometimes you could implement DFS services, or you may have to do it in a different way. You need to look at what the benefit is. Are there any tangible benefits where you can pin down and say, okay, these are the numbers these are the benefits in terms of dollars or rupees or wherever you live, in pesos or whatever. Then you need to also look at whatever products can we offer these people, what are the services, the pricing. Now in some countries, they do remittances. It's purely because the normal remittance provider is pretty expensive. So if you provide a cheaper remittance services, which you can using this type of platform, there will be uptake. So some implementations that route. Then what's the investment? Is your willing to spend a few $1 million building it? This is another question that needs to be answered. And as I said, you look for the investment for at least 2 years. So these are some of the things that you need to look at building the business case. The next one is, how are we going to implement this? How can a financial institution implement it? Some of them, they said they'll do it by themselves, purely because they're large, their coverage is big, there are lots of advantages of doing it. Some I know, they implemented DFS services or branchless banking, and they stopped opening new branches because they could use the platform to access areas that was not served before. So that's why I keep saying you need to build a business case. There are some who work with telcos and started implementing and specifically in one market that I know, a telco went and bought a bank who was doing, it was a microfinance bank. They went and bought it purely because that microfinance bank was providing DFS services and the telco was not allowed to do it. You can also do it with other partner banks. Now, there is one classic example is that there are two banks sharing the same platform, which is unique, and you could go with that type of implementation where you could share cost. You can also use third-party service providers. So you basically pay for initial cost and per transaction so that your investment is less, but there are disadvantages taking that route because you're dependent on them, dependent on their agents, all those things. So you need to look at the pros and cons depending on the market that you're in and then make those decisions. When do we start doing this? If you're in a very small country with 1 million people and vast, it's just a small country, or there's not enough of mobile lines, or they do have access to finance, I don't think people are going to use this. So you need to start looking at the area or the geography that you're going to implement it, whether it makes sense, whether it makes business sense to do it. So these are some of the things that we have seen. Access to banking services, especially in a place like Indonesia, which has 260 million people and 14,000 islands, 60% is unbanked, and access to finance is not as much in most other developed countries or even emerging countries. So it makes sense for a country like Indonesia to go into this type of services. Pakistan, for different reasons, security is one, and also access to finance was another reason. So it's the same in Africa. The distance to financial institutions is pretty, I mean, you have to travel. Technology literacy levels, I do agree with this up to a certain point, purely because I have seen technology illiterate people also using basic phones to do DFS transactions. So again, this is something that you need to look at in your own marketplace. Mobile coverage is very important. User age group is absolutely important because this is something that I have personally experienced in a Latin American country where the client's target market was pensioners. They wanted to implement DFS services. We went to build a strategy and we told them, don't do it because your target market is someone different. But they called us back and asked us to develop the strategy for a younger age group, like between 30 to 45, which makes sense. So you need to also look at the user age group. Delivery of emergency services, that also helped some of the implementation. So you can take these type of opportunities to implement DFS services. Cost is something that you have to be careful. You want to build your own platform, want to work with others or third party. The cost will differ based on your approach. This is a very key factor purely because I have seen implementations, they start with a budget and the budget runs off. They have not reached scale, and the management looks at these type of implementations and say, look, no more money. So you might as well look at cost up front because there's initial capital expenditure as well as recurring expenditure when you set things up, and you need to look at it in detail before you move forward. Okay, let's look at the prerequisites. I'll go into detail so that you get an idea of whatever type of implementation that you do. You need to look at the market condition. Who are your competitors? Well, usually it's your money transfer agents, courier company. There are other informal means. I have seen bus companies carrying cash for from taking cash. The bus companies, they have their agents at the bus depot. They take the money and they pay off at different locations, and they carry out these type of system. They have a float at all these places. So there are different type of competitors. You need to start looking at who are your competitors. Marketplace to consider. The current trend is people are looking at retail networks. That's what I have seen. They are looking at supply chain purely because they reach out to a lot of people. If you just take, I'll just give you an example. Take for instance a milk food producer who has a distribution network. He distributes to all the small shops in most of the countryside. So if you can get that type of network to be your agents, that will probably make a lot of sense, and people do have access. There are challenges, but I'm just telling you about what are the networks that you need to look at. Telcos is definitely one. There are lots of others that you could look at, especially the food chains that can be used as people whom you can use for agent networks. You must leverage your existing networks as well as others, as I mentioned before. Then obviously the regulatory environment, you need to go into great detail to see whether these services can be provided or not. If you can't provide these services, what you need to do is start talking to the central bank. Most of the central banks are open to this. You can give other central banks as examples, and I have seen some central banks speaking to their financial institutions and listening to the financial institutions and changing the regulations to suit these market conditions. Market research is absolutely important. A lot of people don't do market research. They just say, we think this product is going to work. But actually when you do market research, you find out that it's not going to work. So it's important that you do market research to find out what's the demand and the need, right? You can look at primary data which has been published by your Department of Sales and Statistics and people like that. But overall, you need to do market research. You need to check what's your value proposition, what is the value add for your institution as well as for the customers. If there's a value, only the customers will use it, as you know. So it's important. My experience is that focus group assessments are the best. You need to do quantitative research as well as these type of focus groups, and your products and services should be targeted towards certain sectors of the market, which then you see an uptake. So these are some of the things that you may have to do. Products and pricing, again, important. What is the demand for the products? So when you do market research, you can check this too. Some have gone and done savings in some markets and it has not taken off. But we can see savings coming up in certain other markets. Payments is a given. Everybody does payments. Loan disbursements, some have been able to do loan disbursement, but some have not, purely because of the size of the transaction that you can do, which is controlled by the central bank due to anti-money laundering rules and regulations. But savings can also take off I have a feeling that savings will take off in the coming years. One of the most important things is to answer the question, can it be delivered? If it cannot be delivered, it doesn't make sense for you to even start. Pricing is key. If you're looking at a long-term payback on your investment, I suggest that you price it at a very low price so that you can scale it pretty fast. People who started off with high prices learn it way and they drop prices. You need to also, if you're going to use a telco, talk to them in terms of numbers and try and see whether you can get the best price possible. Telcos look at this as an opportunity, saying that, look, we have the monopoly or we are the biggest. So because of that, this is our price, you take it or leave it. I have seen that happening in some markets. So negotiate pretty hard, and if you can get your senior management also to be involved, it will be great. Fee structure for the third party also has to be looked at. Also, one of the things you have to look at is the fee structure to the agents, so that you retain agents. If not, most of them will not want to sign up as agents. So these are some of the things that you need to look at. Internal capacity, about 40% said the mobile coverage and IT is key for this. Internal capacity, when I say it's not just only IT that you need to look at, there are so many other areas that you need to look at, and it's always good to get a third party to do this. Get a third party to come and do, whether you're ready or whether you have the internal capacity to start implementing DFS services. Because one thing that you need to understand is that providing DFS services is like running a credit debit card operation. You need to have 24/7 operation support, call center, customer relations happening. There has to be continuous training, not internal staff, but also your agents, because your agents is your face, the market. That's your storefront or your branch to your customers. So constant agent training is required, and that is a costly affair. You need to start doing it. You need to keep doing it. The front-end stuff internally also has to be done. The type of stuff that is required is just not only IT. You need, I would say this has to be spearheaded by a banking, retail banking type of stuff. But marketing, technology, risk management is a major area that has to be done, and cash management. The reason I talk about cash management is the agents have to be liquid. When people go to do cash out, there has to be money. If not, there won't be uptake. So cash management is also another area that you need to look at. So internal capacity is some area that you need to look at. Marketing is another area. What is the channel that we need to choose? This also, when you do the needs assessment, when you do the research, you can put few questions asking what are the mediums that you look at. You watch TV every day, and from what time to what time? Have you seen billboard ads? You know, do you listen to the radio? Are you on Facebook? And there are some countries, they will start using Facebook to start marketing this, because the Facebook usage is very high. I mean, Indonesia is one, they're the third largest. I hear the Philippines is the 5th largest Facebook users in the world. So these are some of the strategies that you can use. You need to have quite a large DFS literacy budget, for sure. That's why I say that you need to try and do a budget before you move forward. You need to build a budget. Agents, how do you identify agents? This is also another research that you can do. You get a market research company to go out and see who are the best agents. How many clients come into their shop? Where are they located? Is it in front of a bus stand or a train station? These are things that you need to look at, where you have access to people. They are the ones who are going to be the most successful agents. How do you sign them up? You need to have contracts. You need to have certification. You have to have training. Cash flow, I mentioned before. And obviously, you need to look at the benefit. What is the benefit for them? How much are they going to get paid? Can they grow their business? I'll give you an example. There was this one agent that I saw when I went on a field visit. He was right in front of a bus stand, and he had an electronics store, and he used to sell goods, and he came up with a new product saying, okay, you come and open a wallet account with us. For that, he gets paid a commission from the bank. Then I will give you a TV, and this is how you pay. You have to pay so much every month for the next 12 months. And please don't come here to pay. You pay through your wallet. You load cash to your wallet, and please pay through your wallet. Please don't come to my store. I'm giving you an easy way of doing it. So, sorry. So this is one of the examples that that I can give you. I've seen a lot, but this is one way that an agent used this platform for his own business purposes, and it was quite a nice model, and he was quite happy, and he increased his sales also by doing that, because earlier he used to sell it for a fixed price. Now he gives installment payments. So moving on, technology. Now, one of the most important things is, before you start doing DF providing services, you need to have a very stable co-banking system, which in some institutions which I haven't seen. So it's important to see whether you have a stable, secure, scalable co-banking system, because the number of transactions are going to increase. Now, at the same time, there's another way of doing it. You have, for DFS services, you have a separate system, because some co-banking service providers, they charge per account. People who have bought licenses for international co-banking systems, if you are paying just for the license directly, then you are saved, because then you can open any number of accounts. But if you're paying per account, then I think you need to have a different strategy. If not, you're paying for low float accounts, or the people who are unbanked, their float is going to be less. The profitability levels will be less, but you will be paying per account to the co-banking supplier. So be careful about that. The other things that I want to tell you is you could have a separate system for your DFS services and then interface it with your co-banking systems, just to feed in only the financial projections, and also to transfer money from your savings or current account onto your wallet account. You could do only that. As you know, I'm a technology person. I will always say that technology is not the priority in implementing DFS in any institution. But technology do play a key role after you sort out your strategy and all the other components in this whole implementation. So be mindful of that. There are lots of solutions, and there are new solutions coming in for DFS services. The way you go about doing it is, please write a detailed RFP. Please don't write RFPs which are 10 pages. I have seen RFPs which 10 pages, and they have fallen into a lot of trouble. Sit down, design all your requirements, put it down on a piece of paper, all your requirements in terms of how you want to go about doing it, what's going to be the controls, what's going to be the calculations, what are the reports, what are the audit trails, what are the online features that you need, month end, year end, weekly processing, whatever. Just define it on a piece of paper. And please make sure that you write at least 80 to 100 pages in terms of requirements in detail, and ask the vendor to respond to it one by one and tell you whether they can deliver these things, these requirements or not. And make sure that that document is part of the contract that you sign with the vendor. So that, and come to an agreement saying that they're going to deliver these things, these requirements by a certain date. If not, they don't get paid. Write it into the contract, please. That's exactly what I have been doing, and that's one of the reasons I managed to implement most of the systems. I won't say there had not been issues. There had been issues, but most of the systems I managed to implement it on time within a certain budget. So it's important that you try and do this. Moving on, investment. Please develop a budget for 5 years. Thinking based on all the prerequisites that you found out in terms of who are your agents, what is the market research, what's going to be the product, how is going to be the pricing, put all these things together, come up with a budget. The next thing is, the question is, can you afford it? If not, you have to revisit and look at other strategies of doing it. Like take, for instance, we are not going to buy an IT system. we are going to outsource it, or we are going with a third-party provider. You have other options so that you bring your cost down. It's very key that you identify the milestone for success and return on investment. It's important. In the future, the way I see it is that a lot of these investments, you may have to make it whether you like it or not, purely because all the other your other competitors, other banks are doing it. So the way I see it is that a good example is Pakistan. I could give that as the best example, because everybody is providing MFS services, all the banks, almost all the banks, purely because all the others are providing it. This is like getting into an ATM network or providing internet banking. Others are providing it. We need to provide this to our clients. If not, we lose our clients. So you need to be mindful of that. Please get commitment from the top management. If not, things are going to get difficult as we go forward. So in summary, as I said, this is not an IT project. It encompasses a lot of the other areas, and you have to get them involved and be part of this whole implementation. You need to get your high-level management commitment and involvement, not just only commitment, involvement to implement DFS successfully. Get them to sit down at least on your monthly review meeting so that they know what's happening, they know the challenges that you're facing. A lot think that MFS or DFS can be implemented in 6 months. I haven't seen anywhere that it has been implemented in 6 months and been successful. The fastest implementation that was done recently and which was successful was bKash in Bangladesh. They took 18 months. Return on investment, usually the period is longer, but period can be shorter depending on each market. If you can scale it pretty fast, then the period will be shorter. I always keep saying there are no best practices. Don't copy what others have done. Learn from them, learn from their mistake, do it yourself, do it your way. It has to be customized to your country or to your location or to your institution. What others did have not worked. I have seen it happening in some countries. There was one implementation in Afghanistan which was a replication of a system which was implemented in Kenya. They lost $6 million. So please don't copy or please don't try to replicate what others have done. You need to build to suit your needs. Most successful implementations I have seen were done by third-party experts. You need to get experts if you don't have internal experts, and most institutions don't have these type of experts. And there's quite a number of experts right around the world who could get, whom you can have access to, and they will give you good advice to carry out these implementations. So that's the summary, and that I come to the end of my presentation. Jessica, please.
Great, wonderful. Well, thank you so much. That's given us a lot to think about, and we are going to take questions. So if people want to start posting their questions either in the chat box or in the question box, people can go ahead and start typing those in. And if some institutions would prefer, we can also take you off mute, and you are welcome to ask your question directly to Malith as well. But we do have a couple institutions who have been quite successful in terms of implementing mBanking, and they're going to share for a couple minutes on this. So we are actually going to start with one of the examples that Malith had shared as being a successful implementation, and so we have some bankers from Pakistan who are joining us. So Fareed and Waqar, are you there today?
Yes, can you hear us?
Yes, if you could just speak a little bit louder, that would be great.
Okay. Is this better?
Wonderful.
All right. Can we talk?
Yes, yes, please, go right ahead.
Thank you very much for giving us this opportunity. I'd just like to introduce myself. I just have a couple of minutes, so I'm just going to rush through this. My name is Pradeep Chaudhary. I look after marketing and product development at Kushali Bank. And with me is Bakar Yamin, who is the product manager for the retail assets and liabilities, and also looks after channels. So very quickly, I'm just going to give you some introduction to KBL and share with you our motivation for entering this branchless banking, agent banking space, the model itself, and I'm going to share the results so far. Kushali Bank is the largest Pakistani microfinance bank. We have a footprint of 119 branches across 70 plus districts, and customer base of over 500,000 clients, which includes both borrowers and depositors. Traditionally, we have largely relied on our branch network for collection of fee payments, and sometimes we was also going to field to collect, but largely, we have relied on our distribution. Our branches have a trade area of 50 kilometers radius. That means that we solicit only those clients who reside within 50 kilometers radius of a branch. Now these clients have to take out time and spend a couple of hundred rupees to get to the branch to make their repayments. So what we've done is that we have an arrangement with UBL. UBL is also as a sister concern. It has a 22% management stake in Kushali Bank, and we have an arrangement with them for collection of fee payments at Omni Dukans. Omni outlets. Omni is the branches banking platform of UBL, and we started this back in April 2012. So which means that it has been exactly 2 years since we started our agent banking initiative. And the objective was to basically offer transaction convenience to our borrowers. Note here that we do not open accounts. We do not open deposit accounts at these agent outlets. We just offer them, the facility to repay their installments at the agent outlets. So the benefit to the client is that they save on their transportation cost. They save time. They don't have to take time from work, and essentially this results in a behavioral change that affects their savings habits. Just to give you a snapshot of the Omni network where KBL clients service, Omni has over 10,000 outlets, out of which 3,000 have been tapped to Kushali Bank. And my data tells me that since launch, over 1,000 active agents launched to page. That means that at least one has taken place at over 1,000 Omni Dukans since the launch of this initiative. As far as the business volumes are concerned, on average, we clock roughly 30,000 transactions every month, and an average volume of over 100 million, which translates into a ticket size of 3,500 rupees, which is $35. Initially, we were not charging the customers for using this service. We were absorbing the cost which UBL was charging to us, which is 1.3% of the transaction amount, and this covers basically the agent management costs, including the cost of servicing and the cost of liquidity, etc. Customer gets a printed receipt plus an SMS confirmation, and at the back end, UBL shares with us a batch file on a daily basis, and we knock off their loan accounts every day. And at the end of the month, we know the exact volume which has been transacted, and on the basis of which we pay UBL. So that is just about it. Yes.
Great. That's wonderful. Thank you so much. So my understanding when I heard about this is this was a great way to expand your footprint beyond your branches, from the branches that you had to, it sounds like, did you say 5,000 or 10,000 agent banking locations? But quite a few. in terms of that and making it more convenient for your clients to make their installment payments on their loan.
Correct. And that would, the objective was to eventually, this would lead to a growth through deepening of our existing relationships, because we believe that once these accounts become transactional, our customers are more likely to deposit funds into their accounts, which are dormant up until now.
So there's some cross-selling opportunities because of this as well.
Correct.
Wonderful. Well, thank you so much for sharing. We really appreciate it. If anyone has specific questions for our friends at Kushali, please feel free to reach out to them via our discussion boards as well. So thank you so much.
Thank you for having us.
Thank you. And we also have, Malith, I'm sorry, was there anything you want to add to that before we jump into another speaker or some of our questions?
Okay, first of all, good to hear your voice, Farid and Amina. It's been a while since I saw you in Pakistan. This is just a good example of two banks sharing a platform, which has not happened in so many other markets. And they're leveraging the same platform to carry out these transactions. And obviously, than setting up your own network, you could save a lot of cost by coming to some agreements with banks who have already set up this network. So that's basically what I want to add.
That's wonderful. So let's go ahead into some questions. Great. Oh, I'm so glad you can hear me. That's wonderful. Great news. So we'll jump into some questions then. It sounds like we have a couple questions from one of our partners in Zambia. And I'm going to unmute you if you want to try to ask those questions directly. But if not, then I will ask those questions directly to Malith. Anthony, are you there?
Yes, we're here.
Hi. If you'd like to go ahead and ask your question, if you'd like to ask your questions directly to Malith, that would be great.
Okay. The first question was, what is the longest and the shortest period for the return on investment? Hello?
Okay, that's a tough one to answer. Can you hear me?
Okay. Yes, we can hear you.
Okay, great. That's a really difficult question to answer. Return on investment.
From the past experience, how long has it taken a financial institution to break even?
My experience is that what I have seen is about 4 years. These are the institutions that have been successful. It's the 5 or 6 in the world. But I think what is happening in Bangladesh, they might do it long before that.
Okay. Okay. The second question we asked was, would we require to establish a new department for mobile banking, or will it solely be under retail banking?
That's again up to the institution. It all depends on the way you are structured.
Okay.
Most institutions, they have it separately, purely because it's like your credit card department or your internet banking department.
Okay.
Some have it under retail, some have it separately.
Okay. All right. Thank you very much.
Thank you.
Great. Wonderful. And like I mentioned, we're starting to see some questions coming in. And I'm going to, Anthony, thanks so much. I'm going to mute you now. Great. and we're still hoping to have Brack Bank speak a bit. And so if David will let me know if they have joined in, we to get to some of their questions and have them share a little bit how they've implemented the mBanking, mobile banking. But we do have some other questions for Malith, and so Malith, one thing that you've mentioned several times is working with third parties and the importance of working with third parties to build a strategy and to find the right software. And so maybe you could share with us the process to start building these elements, and in terms of working with third parties as well.
Okay, my experience as well as what I have seen, especially when you build a strategy, there are different expertise that is required. You need a person with a vision who look at the business plan of a bank, the vision, mission, as well as the business plan, and then also look at how they want to move forward. That skill is a unique skill which a bank may have or may not have. Then you need, obviously, from the technology side to look at whether the technology is ready or not, or what are the options that are available in that marketplace. You also need people like, especially on the retail side, to look at what are the type of agent networks that are there and how fast they can go forward. The marketing side, the literacy side. So it's not just one or two people who could do this. Then obviously for financial modeling, especially to do the investment planning, as well as return on investment, the previous question, that is a specialized expertise, and one person or one expert cannot. So usually strategy is developed by a team. They come in, they have to carry out certain surveys, lots of interviews, talk to the regulators, do all these things, and then only you could come up with a strategy. So sometimes, I mean, most of the times, these institutions, they get third parties to do it purely because the internal staff, one is they don't have the capacity or they don't have the time. Because whoever who is doing this has to be fully focused, just working on this assignment only, which a lot of the institutions can't afford to do. So that has been the trend, the current trend when DFS implementations, when financial institutions want to start DFS implementations. Jessica.
Great. Thank you very much. And we're starting to see some other questions come in, and we have a question from a partner, from a participant, in terms of partnering to implement mBanking. So when you're partnering with other FIs or when you're partnering with other telcos, what are the best ways to determine how secure their platforms are? And are there standards for measuring these platforms as well?
Yes, let me give you a direct answer. Yes, the platform security is something that has to be done, just like the way you do penetration testing for any IT platform. There is testing that has to be done for whether it can be scaled, whether it's secured. So these aspects can be carried out. And there are specialized companies to do these things. I was involved in one of the projects in an Asian country, I don't want to mention names, where we looked at the platform and we facilitated getting a third party to come and do a proper audit and certification, whether the platform was secured or not. And they had to work for another 6 months to fix some of the issues that were identified. So it's important to see whether it has been platform is secured or certified. Just getting a letter from an auditor or an IT auditor is not good enough. There are specialized companies which does this type of work. It's called PCI DSS assessment as well as PADSS assessment. Those are the technical terms. So it's always good to make sure that those are secure. Then also there's another aspect. There's a fear that when you share platforms that you could have access to the other party's clients. Now that's something that you need to come up. I mean, there are different ways of implementing this so that they don't have access to who the party is. They will just have access to a number, a telephone number, and that's it. Not a telephone number, but an account number. So that way, there are different implementations. If you're really concerned about somebody poaching your clients, if they use the platform, and obviously you can sign contracts, confidentiality contracts, as well as saying that you can't take our customers to that effect. There are lots of ways of handling that. It's going to be like if you look at third-party ATM platforms, or you share ATM platforms with others. Like take, for instance, I can go to Bank A's ATM and provide carry out a transaction for Bank B. That doesn't mean that Bank A gets Bank B's customers' information. So you could secure it that way. Jessica.
Great. We have a couple more questions coming in. So if you have any other questions, this is sort of the last period of time to put them in. So thanks to everyone who is participating in the questions. One of our questions has to do with risk management of mobile banking, and so experience in terms of frauds occurring during issues with control and compensation to clients when they may suffer a loss due to adoption of mobile banking. So, what are some of the risks, and how do you deal with putting sort of strong controls in place?
Risk is also an area that has to be constantly, risk management, risk assessment is something that you need to constantly carry out, just like auditing or having an internal audit unit. There are many ways of mitigating risk. I'm not a risk expert, but I'll tell you what I have seen in many implementations. What they do is some of the frauds, and in some countries the way they handle risk is by a good example is in Pakistan. They have what you call people's registration system called NADRA. 80 million, the last count was 80 million. They had 80 million registration of the population with their thumbprint. So they have biometric thumbprint, and before you open an account, it's mandatory that they carry out KYC and making sure that that's the right person. To identify that person as the right person with all the information. You have his address, his phone numbers, his relatives, all that information is there. So that's one of the ways that you mitigate risk, to make sure you're dealing with the right person. But with all these controls, I've also seen in some countries where the client will walk up to the agent and tell the agent, look, I don't know how to use this. Here's my phone. This is my password. Can you please do a cash in, cash out? Now, something like that, there's no way that you can mitigate risk, because if somebody is willing to give your ATM card and your password to the office peon to go and bring money from the ATM, because you don't have the time to go, then that risk has to be taken by that person who is doing that. So the only way that you can make sure that you mitigate risk is by educating your clients, educating the general public. And there is a lot of public goods that have been developed for this that you can get from the web. You just do a search. There is a lot of YouTube videos done by different providers. You could look at those and make sure that, get ideas and build your own literacy campaign using those things. There is no, I can't tell you that there will be one system where there is no risk. There will always be risk, but the most important thing is to try and see how you could mitigate it and avoid frauds. Because if there are many frauds, people lose respect for the system, trust, and they will not use the system.
Great, thank you. And our last question has to do with the cost of implementing mBanking. And so this is a question sort of across the board that we've had from quite a few of our participants. And we're actually going to be answering this a little bit more in depth on our discussion board. So please keep your eyes peeled for this. But maybe Malad, you can share, what are some ranges in terms of cost to implement mBanking, and how an institution may begin starting to put together a financial model as well for this.
Okay, the cost it's a difficult question to answer because it differs based on the terrain or the country, differs based on the way you want to do the implementation, whether you're going to work with third parties or not, whether you're going to incur capital expenditure, what's going to be the outreach, are you going to leverage other agent networks, or whether you're going to use your own agent network. All these things becomes a factor. So it's really difficult to pinpoint and tell you, okay, this is going to be the cost, unless you really undertake a detailed assessment and then come up with a financial model to do the cost. Then obviously you need to do the return on investment calculations too. I can tell you something about software. I have seen software for DFS ranging going up to $1 million. When I say $1 million, I have seen it because they have asked for a lot of features and they were going to do a lot of things. So there are institutions who decided to build their own platform, build their own software, and they have been successful too. I mean, there are institutions, financial institutions, which has separate software development units to develop their own software. But the issue is that you need to keep on, that capital expenditure has to be, carried forward. Initially it may be cheaper, but as you go along, you build up that cost because there is recurring expenditure. Plus you have to spend a lot of money on research and development. I have seen institutions trying to use smartphones and do biometric verification for transactions. Stuff like that, you need to start doing research, or you need to buy that type of software from third parties and include in your systems. There are institutions that have walked in and said, look, what's your DNA? What's your focus? What's your business? Is it developing software, or whether it's developing banking? Or you're in banking business or in software development business. So these are some of the things that, depending on the institution, I have asked questions, and some of them have taken the route saying that, look, we are going to outsource it. Some have said we are going to develop it. It all depends on how you want to move forward. So building a financial model or the cost, that's a huge challenge, and it has to be done by who understands the whole gamut of DFS services and what you're trying to do. Jessica. Great,
wonderful. Well, thank you so much for this, very robust discussion session, and we of our participants asking questions, as well as our institutions that were able to share with us as well. And so I encourage you, if you have any further questions, please feel free to reach out to me directly, reach out to Malith. We will be posting this question as well as a little bit of follow-up on this topic on our discussion board as well. And so we do encourage you to go to our discussion forums and participate there as well. So again, thanks so much to everyone, and we look forward to having you join us at our webinars again in June. So thanks very much.